I finally added this ETF to my portfolio. It's an ETF that I have been wanting to add for a while now in order to solidify my hybrid dividend investing strategy. And before I reveal which ETF I ended up adding, I'm going to explain what I was looking for and what gap I was looking to fill. The core of my hybrid dividend investing strategy revolves around the concept of a balanced mixture between monthly income and growth over the long term, while also being diversified across Canada, the United States, and globally. On the Canadian side, my core holdings are HDIV for covered call monthly income and VDY for longer term dividend growth. And on the US side, I have QYLD and RYLD for covered call monthly income and RA for some juicy US real estate exposure that also pays me a monthly distribution. So what's missing? Well, clearly I'm missing some global diversification, and I plan on adding that in the future. But other than that, I'm missing some longer term dividend growth in the US. And given the market situation, I felt like it was a great time to start slowly building up a position in an ETF that will give me just that. Just like how it's a great time to hit that like button. So what ETF did I end up going with? It was none other than SCHD, the Schwab US Dividend Equity ETF. Why? Because it overall met my goal with a low management fee and a solid track record, and it holds some of the best dividend growth companies in the US, like some of the ones you see on this list here. It's honestly a best-in-class ETF that has proven to be a top pick for so many dividend investors out there. In a tweet about 2 weeks ago, I stated that if SCHD falls to around $70 or lower, I would be adding it to my US pie. Keep in mind, this was around when the market was really plummeting, so I figured surely it should reach that price point. So even around $73, I waited. Unfortunately, trying to time the market got the better of me. And once again, the point was proven. It's about time in the market, not timing the market. So this week, I ended up purchasing some SCHD and adding it at the price of $77.52 because I really just want to start building up that position and aligning my portfolio with my overall strategy. And over time, I'll keep adding regardless of the price. Just look at the long-term chart here and think about how much these companies within the ETF will grow their dividend in the next 5, 10, and even 15 years. Not to mention the potential in capital appreciation that could be had over the long term as well. So I've been a long-time fan of SCHD and have had it on my watch list for a while, but now I'm finally happy to be an owner and start building up that position for the long term. Speaking of the long term, there is a mistake that about 80% of Canadians have been making for a long while now. And if you want to know if you're part of that 80%, check out this video, which explains what that mistake is and how you can avoid it. I'll see you there.